and it will be adopted by every country except North Korea, Russia, and China. And overnight, it will make America even a stronger nation in terms of settling for financial services. So it'll be the very first crypto policy that passes probably sometime after November 8th. But everybody in here should be optimistic about that, because that signals the onslaught of more regulation that will deal with other digital commodities like Bitcoin and everything else. One of the great promises of Web3 and why we're all here today is that Web3 should signal the mass adoption of blockchain technology. And all of the dollars that are going into Web3 development are trying to do that, solving for the security of wallets, the ease of use of wallets, transparency of the chain, making it adaptable and easy to use. And the killer app, I would agree with you, would be a downloadable app that would let me store my USDC or whichever stablecoin I choose to use as a payment system, and allow me to use that anywhere in the world, in the countries that have adopted it, with a fraction of the friction fees. Imagine a credit card is 350 basis points. ACH transfer fees, SWIFT system transfer fees, all those fees. Now, you wonder why Jamie Dimon is trying to talk this down. I mean, this is threatening his book in a big way. And so just payment systems alone are going to really cause some headaches in banks, because they love to transfer assets between themselves and charge you friction. Their gas fees are crazy high. And so this is the disruption and the potential. And I'd argue, you know, to this Voyager story and all of these guys that have gone bankrupt, let me all offer an alternative view. Let's be fair. I mean, he's a really successful manager in that space. I own JP Morgan stock, which hit a 52-week low yesterday, just so you know. And it's trading at an 8 multiple, which is one of the lowest it's ever traded at. And part of that reason is many investors see this disruption coming in the next 2 years. So these banks are going to have to figure out how to adapt to this and compete with it. And the best way I'd say is, I believe that the sector will be the 12th sector of the S&P in 10 years. So what's going to happen is financial services is a really big sector of the S&P. Some portion of that value is going to get transferred over to blockchain, the 12th sector, which doesn't exist yet. So you have to decide as an investor, there's 2 risks in investing in crypto. One risk is you invest in crypto. It's volatile and it goes to zero. Could happen. The other risk is you don't invest in crypto and all that asset value transfers over the next 2 or 3 or 4 or 5 years into blockchain, which is now providing some portion of financial services. You got risks both ways. I've chosen to invest in crypto and blockchain and many, many projects, including I'm a large shareholder of what Ben is doing here, because I can invest in that company and it's regulated. I got no rogue anything. There's no Kim Kardashian SEC charge there. That's not going to happen. This is a regulated business in a market that's very advanced. The Canadian option, I mean, I'm involved in so many different financial services companies and also that issue securities under the mandate of the SEC. So, you know, we know the regulator, we know the system, and we don't breach it for any one project. We can't do that. It affects all the rest of the businesses. So, you know, going to your question about technology, I think if you think about mass adoption, there's 3 things that have to happen in, let's say, the next 24 months. The wallet has to work. And basically, the wallets, whether you're decentralized or centralized, for lack of a better word, are shit. Like they're just shit. And they're not safe, they're hard to use, the average person doesn't know what they're doing. The passphrase technology, everybody gets screwed the first time. You always start with, you know, $250 and lose it immediately, you get it ripped off. It's always good to learn that, but that just isn't going to work. So we're going to have to, Web3 is about solving that problem. Number 2, we need security. You got to have much better security as you amass assets, even if it's just stable coins. But if you're starting to build a portfolio in today's world and you're putting some portion of your savings to work, I don't care whether you Schwab or Fidelity or Interactive Brokers, you're not worried about security. They've solved that problem. They've built that trust. They've done it over decades. I'm going to answer that a different way, and I'll tell you how. And I believe that this is a true situation. You teach, and I've talked about this quite a bit, if you go and teach at MIT, as I do, graduating cohorts of engineers, I use this example all the time. And so if you look at the cohorts that go into those colleges, let's take MIT for an example. You pretty well need a perfect math score. They don't care what planet or country you come from. You have to be the best of the best of the best of the best of the best. Then you can be part of that cohort. And you bring your ideas and you are educated by a world-class institution. But it's when they graduate that you start to see what's going on, because the reason I go there selfishly is a third of the class will always start new deals. You want to find out about these projects long before the VCs do. That's why I go there. I spend the time. And I've met many great, founders, et cetera. But here's what's changed in the last 3 years. You talk to them about where they're going to work, right? These guys have 50 job offers. I don't care what discipline of engineering you're talking about, electrical, computer science, mechanical, it doesn't matter. When you're graduating out of any college these days as an engineer, you got 50 job offers. Recession, no recession, doesn't matter. And you have them from all around the world. That's just fucking stupid. I mean, 100% stupid. And so we should be giving every one of those people the option of an American passport the second they get their diploma and they stay here, because they're the future of this industry and they're happy to work everywhere else. The Caribbean islands, the UAE, Brazil, Switzerland, everywhere else except America. That's very fucked up. Not here. And so that is a problem, because it kind of came under the radar screen. Blockchains came screaming on. A lot of regulators didn't understand it. Now they're starting to see the use cases for it, and they're saying, shit, we don't have a piece of this. And I think it will resolve itself in the next 2 years. I think the midterms will probably be a turning point. Not to get into politics, but it's highly likely the House flips. I don't know about the Senate. Everything will get stalled in Washington except bipartisan bills. So there'll be no more of this jamming, spending bills through. They'll start to focus on things they both agree on. And one of them they agree on right now is stablecoins and digital commodities, as in Bitcoin. So that will be a good thing for this. Well, I mean, people go to the path of least resistance. They always do. And so, providing stability for payment systems on the chain and regulation for it is going to be very, very disruptive, because it's going to be so inexpensive. And it works internationally. So there's none of this, oh, I can't do it in Switzerland, or I can't pay for my meal in London or Paris. All that goes away. It just evaporates, because the vendor at your Guide Michelin restaurant in Paris that you're having dinner at is saying, oh, you got a stable coin? Here's my wallet. Boom. Pay your bill. And all of a sudden, that 3.5% that you were paying to whichever credit card you had, that is peeling off 150 basis points for themselves. I mean, I invest in all of these platforms because they make so much money. I mean, it's fantastic. But I'm also going to invest in Circle and other, because I know those guys are going to disrupt the credit card companies. So I've made a ton of credit cards, but now, I mean, this is going to get crazy, because there's going to be a hell of a competition.